All right, guys. Good morning. Good morning. Hope you guys are doing good today. We got PPI inflation data. Last one was really bad. Almost 1% month over month PPI wholesale inflation growth. This one is the first update since then. It is ahead of CPI, but it's the first update since then. We'll see what it looks like. Markets are mostly up. NASDAQ almost at 24,000. We're at 23,925s right now. Most of my positions are doing pretty good. Yeah, GameStop earnings all the way back up to 26, but GameStop's been basically in the same range for 3 months. Let me know if you can hear the music. Let me know if the mic's good. It should be pretty solid. Again, NASDAQ up to almost 24. It's 23,920s here. Looks good. CWD gave all of it back, which not surprising here. I'm sure Octo did as well. I wish I could have shorted these. Yeah, they look predictable. Let me do a poll here. The PPI data expected today. It's expected at 0.3%, basically by everybody. Year-over-year numbers. Yeah, 0.3% for both core and headline. Let me see if we can find some year-over-year numbers somewhere. We got 30-year mortgage rates show up this morning. Showed up at 6.49%. So mortgage rates are decreasing, which is good. Core PPI year-over-year expected at 3.5%. Most other stuff is up today. We did have some earnings yesterday. Oracle is helping push the market right now. Here's Oracle. It's up to 320s. AI focused earnings. It did miss some expectations, but strong demand in cloud segment fueled this rise up. It's up from 240s to 320. So Oracle up huge percentages. Yeah, this is up like $90 a share at a $220 company. So that's a big percentage. This PPI inflation, we're going to do a poll now. Does PPI inflation show up higher or lower than the 0.3% expected? We're going to do higher, lower, and then as expected as options. The question is, are we leading towards a recession? I don't know. The report's at 8:30. We'll put a timer up. About an hour. Here's a timer. AI bubble and CapEx going down. Check their projections for Oracle. Look at the NASDAQ pump here. Again, Oracle's helping it. Bitcoin at 112. So we can take a look at gold, which was at all-time highs. Pulling back a little bit. All-time highs are now for futures, 37.15 for gold futures. Nvidia all the way back up to 175, which is good and optimistic for that as well. Yeah, Oracle revenue showed up at 14.9 billion, 12% year-over-year increase. The expectation was 1504. So it did actually miss the EPS estimates. or the revenue estimates. GAAP EPS came in at 101, down 2%. Adjusted EPS 147, up 6%. Why did my music stop, bro? Lower is good, higher is worse. PPI is inflation data, it's wholesale inflation, so lower is better, higher is worse generally. Yeah, PPI expected at 0.3%. Last time it showed up at 0.9%, which was shockingly high. Year over year expected at 3.5%, which is still a lot for core. 3.7% is what it showed up at last time for core. Headline year over year expected at 3.3. That's what it showed up at last time. But these are all really elevated numbers relative to what they, what they thought we would show up as last time. But then when we ended up showing up at numbers, we were pretty freaking high. So we got some people saying markets expect aggressive Fed cuts, bringing rates down 3% by the end of next year. But Renaissance Macros Neil Dutta says September dot plot won't align for it to match. 8 officials would need to lower their 26 projections to 3% or less. The scenario he sees is unlikely. Let's take a look at yields this morning. I don't know why I'm yawning so much today. Yields are up 0.017% today, so they're not really changed much. PPI data will swing this though. Yeah, we're up slightly over the last few days for rate odds. At least in terms of yields, but I think yesterday, remember, if you didn't watch the stream yesterday, we had a benchmark revision, the largest in history, at 911,000 revised jobs down for NFPs up to March of this year. The CME watch tool did change a little bit on this. Now we have a little bit slightly increased odds of cuts, although yields are elevated for the last 2 days. It's interesting. 10-year yields, that is. Yeah, look. So we are at 91.8%. 91.8% odds. 8.2% likely of a 50 cut. So still looking pretty probable for 25. I guess what you have to remember here is that these are changing the odds for 50. So 50 odds actually decreased and 25 odds increased here, which is what yesterday's benchmark revision might have confirmed. Wells Fargo says the Fed is going to cut rates 5 times by mid next year. They expect the Fed to deliver 5 25 basis point rate cuts through mid 2026. They project cuts at the next 3 meetings, lowering rates to 3.5 to 3.75 by the end of the year, followed by 2 more in March of next year and June, bringing the range to 3 to 3.25%. The outlook reflects a weakening labor market, job growth averaging just 29,000 in August, and unemployment rising to 4.3%. Inflation still a challenge. Core PCE up 2.9% year over year. Wells Fargo noted inflation expectations are stable, though. They raise U.S. recession odds to 35% in the next year, but they expect stronger growth later, forecasting 2.4% GDP growth next year as fiscal stimulus and rate cuts take effect. 35% odds of a recession. So we had the apple of it yesterday. See where Apple's at. Look at Oracle though, man. That's a crazy big move. Apple, as many people thought, was kind of a fade the news event. Hey, what's up, Goose? Yeah, GameStop up big from their earnings. I didn't cover it. It's just not big enough to cover, I think. But not anymore. Maybe it used to be, but not anymore. Yeah, I'm drinking coffee. Is as expected pump markets today? Maybe. Probably. Yeah, so Apple debuted the iPhone 17, 17 Pro, and Pro Max in a super thin iPhone Air, which is 5.6 millimeters. They emphasize brighter ProMotion displays, larger batteries, and across-the-board camera upgrades. The Air slots between base and Pro, shares the A19 Pro chip, is eSIM only, and starts at $999, 256 gigs. Pre-orders Friday, September 12th, on sale Friday, September 19th. Apple Watch series got Series 11, SE3, and Ultra 3 health and safety tools, which have hypertension alerts pending regulatory clearance. AirPod Pro 3s, heart rate sensing, live translation, and improved ANC. Up batteries to 8 hours. I'll probably get the new AirPods. Translation thing's pretty cool. All right, look at the NASDAQ here. It's slowly moving up ahead of PPI inflation data. 35% is a lot. That's not small. No, I agree. Do we dump by Friday? Yeah, I'm looking up some other breaking news here. HSBC expects OPEC Plus to start unwinding 1.6 MBD voluntary cuts from October. They maintain US $65 BBL Brit forecast from Q4 with rising downside risks from rising market surplus. They said we are skeptical that OPEC Plus will blink unless oil prices fall materially. And they expect output to rise by almost the full quotas. Danaher authorizes 35 million share repurchase program, no expiration. Again, mortgage rates showed up lower, which is good. I think Chewy posted numbers this morning. They showed up at 33 cents versus expected 33 cents. Revenue of 3.1 versus 3.08 expected. How's Chewy reacting to earnings? Oracle's up big, of course. Here's Chewy. Chewy's down. $39 a share. Still an upward trend for a few years, though, for Chewy. Another one of the penny stocks that went crazy, Octo, OCTO. Of course, it didn't hold these crazy gains it put in. It never was going to. Maybe it rips back up after a few days. That's possible, but we'll see. So again, investors are waiting for PPI inflation. They're betting on aggressive rate cuts. Rate futures now pricing in a little bit more than just 25. Labor data yesterday, deterioration has further crystallized market expectations that the Fed will act more decisively to support the economy. So it's pretty likely we're going to cut rates now. Does anybody think we're not going to cut rates next week? Again, in August, only 22,000 jobs were added. Really weak labor report last Friday. Yesterday, we had a really weak benchmark revision as well. That was below the 75,000 expectations. Ugh. Ugh. Sorry. Sneezing. Ugh. Yeah. Labor data yesterday, benchmark revision, the biggest in history, 911,000. We've had a rally in bonds and a drop in yields. 10-year yields edged lower. They've been going down all week. They are up a little bit over the last few days, though. Equities, mixed responses. The Nasdaq's actually up a little bit. We're up to almost 24,000, 23.93 right now. It's going to depend on this inflation data. If this inflation data comes in hot, what it's going to mean here is that it's going to be more probable that we're going to cut 50. I don't think we're going to cut 50 still, but if we come in elevated here, it's going to become more probable that we're going to cut 50. And so if we get hot inflation today, the odds of a 50 cut should increase. But yeah, Oracle, one of the big stories of the day. GameStop up 7 to 8%. These is bullish. Yeah. Thank you, guys. No, PPI comes out in about an hour. 8:30 Eastern. It's 7:32 Eastern, so we got about an hour. Again, you can see the expectations at the bottom of the screen. 0.3% month over month for headline and core, and then regular is expected at 2.5% or 3.5% for core, and 3.3% for headline, I think. I might have that backwards. Yeah, no, that's right. 3.5% expected for core. Last time it showed up at 3.7. Year over year expected at 3.3. Last time it showed up at 3.3 for headline CPI or PPI. And then tomorrow we get the consumer price index. PPI is just wholesale prices, right? Eventually, a lot of the time they get passed on to consumers. And so tomorrow's report might be more interesting than today's, because if PPI is elevated, but you know, if PPI is elevated, but CPI is still low, we're okay, I think, still. Also, Bank of America, after the Apple event, has raised the price target to 270 and reiterated a buy price target for Apple. They lifted its price target 270 from 260, maintaining a buy rating. The analyst said Apple's latest launch delivered expected updates to iPhone, Watch, and AirPods with new health features, AI-powered tools like live translation, and hardware upgrades, including A19 chips. Yeah, I think the live translation thing's pretty cool. Again, an NBA 30-year mortgage rate showed up at this number here. I'm going to put this up in chat, but look at this. If data points to a 50 and not a 25, the market will panic and sell off, would almost suggest there are bigger problems. Yeah, it's interesting. So like yesterday, what we saw here from the data here, which I thought was a really interesting, look at the NASDAQ still push. One of the interesting things we saw yesterday is that the big benchmark revision, the largest in history, that revised jobs down, minus 900 plus thousand, right? The big revision actually made 50 basis point odds decrease and 25 basis point odds increase, right? Like prior to this 900,000 announcement, this was at 10%. So this was about right here. And this was lower. This was at about 90%. And so what we saw from the revision is that the odds of a 50 cut decreased and the odds of a 25 basis point cut increased from the data. Now, I think inflation data is going to give us a deeper look at that. I think I said something wrong earlier. I think did I say if we get high inflation? Yeah, if we get higher inflation, it's going to make odds of rate cuts overall decrease, 50 and 25. 50, if we get higher inflation data, these odds are probably going to go away. It depends on how high it shows up though. But if we get high inflation data, we're not going to have a 50 basis point bet anymore, I think. But we'll see. Right. Yeah, if we get high inflation, they're going to be less likely to cut rates aggressively because in order to cut rates aggressively, in order to stimulate the economy, which can cause more inflation, they need inflation to be balanced, right? And if inflation is not balanced, that's bad, and they're going to be less likely to cut. Look at the NASDAQ rip up here. Let's see what the reason is. This Oracle? No, it's not Oracle. Looks like Nvidia. Nvidia just broke highs of the day again. It's at 175.39. I'm watching 950s. I think we might chop into PPI, so I'm watching 950s, unless this is news driven. Let me see if I can check that out real quick. Hold on. I'll short 950s if we get there. I don't know if I should, but I'll play with it. We made a good bit of money yesterday too. Sub 4,000 or sub 4% on the 10-year. Yeah, that's probably true. As we get closer to the rate decision, yields will decrease. Yeah, I would have shorted 950. We just didn't quite get it. Nvidia's still popping though. That looks good. AMD pushing up. Microchips are doing stronger today. Again, gold's still down, but still elevated close to all-time highs. Surprised we don't have more news coming out right now. Jim Cramer said, quote, when do the index funds come in and buy Oracle? Do they come in on top of the overnight Robinhood buying? Speaking of Robinhood still at all-time highs. Been pushing up since getting added to the S&P effective, I think it's September 22nd. Nvidia's still looking pretty strong up here, though. It's at 175.50s. All right, I have a combine that I can trade here just to play around. I think that's what I'm going to do right now. I'm going to make a big bet that we're going to chop sideways. And I might actually add up to 950 and just... I know I'm catching a falling knife on the upside. I know that. I understand. But I can just add to it up here. See if we rejected 950. The reason I'm doing this is because we have inflation data, and I think the market, in theory, should behave in a choppy way into inflation data. So I'm essentially looking for us to reject up here at 950. And if we don't, that's okay. 50 bucks, it's not the end of the world. I've already got 3 funded accounts, so when I see one reset, I'm just kind of like, okay. But we'll see how it goes. Don't copy me. I'm not an investment professional. Let me put this up on screen. Definitely don't copy me. Not an investment professional. Do you think stuff happening in France, Canada, UK would cause stuff in the US? France pretty much getting... Yeah, I mean, maybe a little bit. Not that heavy, I think. I don't think it's going to really impact things too heavy there. Maybe a little bit, but I don't think enough to worry. All right, here's 950s. I'm going to add to this right at 950s if we can get up there. There's 950s. All right, we're in. Should have waited for 950. Look at that rejection right there. I'm gonna cut half of this here, I think, and I'm just gonna wait for a retest and maybe add back to it just to limit my risk. Alright, there we go. That's a better position. If we do reject, great. If not, it's a challenge account. We'll be alright. We got the rejection at 950. Now we just gotta wait to see if it follows through up here. Yeah, CWD came all the way back down. All the way back down. Not shocking, man. Most of these penny stocks, they just don't hold. They're pump and dumps is the way you got to look at them. Like, they get pumped up and then they never hold, and then bag holders sit on them and lose money. Like, that's kind of what happens. Octo didn't hold as well. Although Octo maybe has another chance to run. I'm not really messing with it. Like I said, that's not really my style. So... And if this trade doesn't work here, I'm just going to get out. And what I might do is buy gold down here. I think gold, regardless of what happens for inflation data. All right, we're starting to spike. I'm going to just cut it right here. Pretty small for a challenge account. I think what I'm going to do on this account, it's a challenge account, so I can let it sit, is I think I'm going to buy gold on this pullback into, I'm going to buy small enough size where I'm not in trouble. But gold is pulled back enough to where I'm going to buy gold right here and see if gold makes a comeback up. If that makes sense. And then I'll probably just trade my actual funded accounts the rest of the day. GameStop, man. I mean, GameStop had good earnings. The problem with GameStop is that GameStop's been in the same spot for 3 months now. It goes up to 35, comes back down to 20, and then it consolidates, and that's kind of what it's done. The problem with GameStop is that GameStop, I'm just, honestly, to be real, and I'm not against you guys in GameStop, I'm not optimistic that GameStop is going to continue. I don't think GameStop is going to succeed as a company outside of maybe stock. Like, GameStop simply does not have enough traffic that it needs to succeed as a brick and mortar retail business. Right, and then sure, they might sell some stuff online. The question you have to ask yourself is it going to be justifiable enough to keep all those stores open? I don't think so. I just don't think so. Are they going to make enough revenue reselling games per store to keep the store open? I don't necessarily think so. But with that said, GameStop revenue showed up at 972, making 22% year-over-year increase, which is good. Net income 168 million from 14.8 million a year ago. They had profitable EPS, 25 cent adjusted EPS, significant above the previous 1 cent year over year, reached 66.4 million, a turnaround from a 22 million loss. You know, I mean, maybe look, I want them to succeed, I do. But what I think here is, well, I think what we got here is we have a year in which we had the Switch 2 come out, and I don't think we're gonna get new consoles out every year, and so I think over the last 6 months we have more sales than we normally would. But I hope I'm wrong. I hope GameStop wins. I really do. I hope GameStop wins. I'm not the most optimistic at them winning, you know. Yeah, if they keep buying Bitcoin and they turn into a micro strategy, sure, you know, let them do it. That's probably that's the path to riches for GameStop, maybe. If they do that, that's fine. But their underlying business is not gonna, you know, I mean, you got to think about it like this, right? Think about how many stores that are still open from the 2000s, right? That are losing money regularly. You know, they're gonna have to close stores no matter what. Right? Like, no matter what, they're not going to be able to keep the same amount of stores open that they did in the mid 2000s. It's just not a reasonable expectation for GameStop. And so they're going to have to close stores. And I think they have been, which is good. Okay. So we did get into a gold position. We are now up about $800, $600. Yeah, we just made about $800 on that gold trade that we got in. I'll probably buy gold again. and let it sit. But show you the combine account that we have. Trades we just made. Yeah, you can see 180, 210, 200, 200, 10. I'll take it. Green is good. I don't know if gold's gonna hold, but see. Yeah, it's a lot of rent. That's expensive. I had 3 contracts of gold, give or take. I was just looking for a rebound. That's what we got. I assume gold's gonna head up into inflation data. I might be wrong. That's just a thesis here, guys. So like, I assume gold's gonna move up into the inflation data. Like I just assume that's gonna happen. I might be wrong, but I'm trading gold futures. Not an investment professional. Don't copy me. I have no idea what I'm talking about half the time. Might be wildly wrong about anything and everything I say. The big story of the day is PPI inflation data. We had a poll that said the 10-year treasury yield is going to fall to 4.2% in 3 months and hold at that level in 6. Have you seen the 10-year treasury yield's currently at 4.06%? It's well under 4.2%. It's not going to fall to 4.2%. It's going to increase to 4.2% now. That poll is delayed, but yeah, it's a Reuters poll. It says U.S. 10-year treasury yield to fall to 4.2% in 3 months and hold at that level in 6, maybe versus 4.3 in August poll. I don't know. Oracle's up ridiculous amounts. I mean, it could run, but Oracle is up huge percentages overnight. For a big company like this percentage is wild, right? Like, just to put this into perspective here, Oracle is up from 240, basically, all the way up to 320 right now. So Oracle is effectively up 33% overnight from earnings. 33% for a company the size of Oracle. That's wild, dude. That's a huge percentage overnight for a company. And so could it go up more? Sure. Is it likely to go up more? I don't know. GameStop not so boring now. I mean, I still think GameStop's a little boring. It's still in the same range. GameStop hasn't broken out of the range that it's been in a long time. It's still kind of in that range between... GameStop has been big range but flat since 2024. It goes up to 34s, 35s, it goes down to 20, it goes back up to 30, 34s, 35s. It doesn't hold, it goes back to 20. And so yeah, I want GameStop to succeed. And maybe if they keep buying Bitcoin and they turn into like a micro strategy, that they might actually succeed. But I think their stores are going to lose money just because of the nature of business they're in. Sure, every 8 years they might do a console sales like bump to their numbers. But outside of that, I don't know. I want them to do well, though. I'm just not going to stream the earnings. It's just not big enough. I've kind of pivoted to only streaming Mag 7 earnings. Just because it's just... half the time I'd be sitting there, it's just not worth it. Oh, it's certainly biased. Top 3 most biased ever. Yeah, that's a wild increase. Yeah, it was their earnings forecast. So Oracle is up right now because of here, hold on. I looked this up. Oracle is up right now. Optimistic cloud backlog AI infrastructure is why they're up. Oracle now expects 77% growth, reaching 18 billion in cloud infrastructure growth. Revenue for fiscal year of 2026, it's up 70% from its prior target. That's why they're up. They're up 28% in total cloud, which is IaaS, and SaaS, which is software as a service. 27% in constant currency. Infrastructure, 3.3 billion, up 55%. Applications, which is SaaS, software as a service, up 3.8 billion, up 11%. So yeah, they're doing good. Let's watch Nvidia though. Nvidia is driving this move this morning up. And I think the obvious level ahead of inflation data is 24,000 on the upside, maybe 23.9 on the downside. We'll see. Yeah, AI bubble is what a lot of people are saying. I don't know if that's true. We'll see. How do I change this? All right, so Tesla is losing market share. Cox Automotive estimated that Tesla's share of U.S. electric vehicle market was at 38% in August, its lowest ever point, and down from 42% in July. Novo cut 9,000 jobs and profit forecasts. Okay, so Lisa Cook can now stay at the Fed, and she'll likely vote at this month's rate meeting. A judge ruled that federal governor Lisa Cook should stay in her post for the time being, likely preserving her vote at the September 17th meeting that will set interest rates and delivering a setback to the president's efforts. Public interest in Fed Reserve independence weighs in favor of the reinstatement, according to U.S. District Court Judge Gia Cobb, District of Columbia. She said that independence is critical in promoting stability to the nation's banking system. Let me know if you agree with this, guys. Again, Oracle is up in its best day since 1999. We talked about it, up 32% roughly. Crazy percentage, honestly. The president is now urging the European Union to oppose 100% tariffs on China, India. India is agreeing to talks now, they say. Nasdaq still holding at that 150 level. Yeah, Nebius is still up. Yeah, I mean, I've seen a couple things in EVs. Like, I like I like Rivians. Rivians are cool cars. I've seen Rivians. Somebody that I actually got to look inside one not that long ago. They're cool. The only problem with Rivians, okay, is that, like, the edge that Teslas have over Rivian and other EVs is that Teslas will fully drive themselves with software. They will fully drive themselves. This is something that Rivian is not anywhere close to doing. And so it depends on how important that aspect of Tesla is for most EV owners. Like, if you want a car that completely drives itself, you kind of got to get a Tesla at this point in time. There's not really any other options outside of that. And that is the type of software that is going to benefit Tesla long term. And so I like Tesla long term. I think Elon needs to stop being so political. I don't think it helps him that much. Although I have seen a lot of Teslas recently. Yeah, I expect markets to be choppy ahead of this. NVIDIA sold GPUs to Oracle. Yeah, Robinhood breaking all-time highs. Has been for the last few days. This is the NASDAQ. We got gold, Oracle, NVIDIA charts. China's defense minister reaffirms commitment to maintaining peace and stability in the South China Sea. The sell side on Apple Post event. The launch was broadly in line with expectations and see some price target raises, albeit nothing extensive. I don't know who said that. They didn't give a source. CPI report is Thursday. It's Thursday. So PPI is today on Wednesday. CPI is on Thursday. All right, so two issuers are considering new U.S. investment-grade bonds on Wednesday, according to Bloomberg, citing an informal survey of debt underwriters. All right, guys, let's look at our poll numbers. We did a poll earlier. 55% think PPI inflation shows up higher than the 0.3% expected month over month. 20% think lower. 26% think as expected here. Will GameStop hold its gains? Yeah, tomorrow's CPI. You think we will drop? I'm not sure. Powell's not going to speak live. He's going to speak live next Wednesday. What do we want to see in the report today to help with a 50 basis point cut? You want to see lower inflation. The lower the inflation is, the more of a green light the Fed has to cut rates more aggressively based off of weak labor data, right? So, but in order to cut rates aggressively, like a 50 basis point cut versus a 25, they need lower inflation data. And that's something that we have not seen over the last few inflation reports. CPI was mostly flat, but it still increased a little bit month over month. But PPI data last time was absolutely horrible. It was not good at all. It was terrible. It was high. It was almost 4% for core. And so this report is going to be pivotal in terms of what we do here. I think if we show up higher than expected at all, it's going to basically cancel out any odds for a 50 basis point cut next week on Wednesday. There's still always a chance. You never know. But I think, yeah, PPI was terrible. Not good. Well, we're looking at expected numbers here. And again, the expected numbers for PPI today are 0.3% for both core and regular. Last time PPI month over month was almost 1% at 0.9%. It was really bad. Core PPI last time was 0.9% as well, right? So both core and regular PPI month over month were both almost 1%. Shockingly high. And so a lot of eyes are going to be on PPI today because the last one was freaking terrible. Yeah. Again, mortgage rates did decrease a little bit though, so that's good. Are you expecting a bloodbath? Not necessarily. I expect the numbers to be as expected. Yeah, I expect as expected numbers. But I don't know. I'm just straight up guessing here. That's just what I'm thinking about today in terms of balance. I think it's as expected, but I don't know. Is higher better for markets mean rate cuts sooner? No, it's the opposite, David. Higher inflation data means it's less likely we cut rates. Right, in order to cut rates, right? Think about it like this. Rate cuts are stimulative, meaning they stimulate the economy. They try to make the economy stronger, the labor market stronger, right? When interest rates are cheaper, lower, businesses can take out loans, expand more, hire more people. People tend to spend more. They have cheaper access to leverage and money. And so when you cut interest rates, it's stimulative to the economy. When all that stuff happens, one of the consequences can be inflation. So when that happens, one of the consequences can be inflation. And so if inflation is elevated, it's less of a green light to cut interest rates aggressively, right? If inflation is low, that gives them more of a green light to cut rates aggressively, right? If inflation's too big of a risk, the Fed will actually raise rates. This is something that you saw in 2022. What the Fed did in 2022, inflation had spiked up from 2020. They did a lot of money printing and QE and stimulus checks and brought rates to almost zero. The consequence by 2022 was inflation had spiked to almost 10% for CPI inflation, consumer inflation. And so then the Fed does the other thing, which is they raise rates aggressively, right? And they raise rates for the same but opposite reason, right? If inflation's elevated, then they want to push the economy and labor market down a little bit to slow inflation. They'll raise interest rates. When interest rates are higher, people have less cheap access to leverage, businesses expand less, and ultimately it can slow inflation down some. We're still doing quantitative tightening from 2022. We reduced it by 80% a couple meetings ago, but we're still doing it fully with MBSs, so mortgages. But we are starting to see mortgage rates decrease a little bit, which are based off of yields a lot of the time too. So yeah. Will PPI affect gold? Probably at least a little bit. I don't know how much it's going to affect gold. Probably a little bit, at least. Markets overall tend to react to it, depending on how bad it is. If it's as expected, a lot of the time you get less of a reaction, depending on the context of what's going on. If it's higher than expected, like by a huge number, that's the situation in which you might get a big reaction on the upside or downside. And just to clarify, we don't know what the market's going to do. I think last time PPI was hot, the market actually went up. And so sometimes data like this can be buy the rumor, sell the news, where it's bad data, but because we've dropped leading into it, the market's react in a positive way. Kind of people start covering positions and stuff. So it's very difficult and tricky to figure out what we're going to do from it. Volatility, yeah, we'll see. Don't do it. I'm going to put you in timeout just for saying that, Chris. How dare you? Nothing here is financial advice. We are not market professionals, not liable for losses. Understand rules up screen. I'll even add it to the bottom here. There we go. I gotta make this a little bit smaller now. A little bit larger here. All right, hold on. That's better. All right, there you go. Nothing here is financial advice. We are not market professionals. I mean, we are not market professional implies that it's not financial advice, but I'm just going to add it anyway. It was. That's why I put it on top. Military tensions. Yeah, let's look at oil. Look at the NASDAQ bump up here. Oil's still at 63s. It's been pretty stagnant. Higher inflation market tanks. Well, water's wet, you know. Kind of an obvious reaction there. Sometimes we do the opposite, though. We'll see. I don't think that's a wild prediction, though. If we get high inflation, market gets scared. Jefferies increased the price target for Alibaba to 178 from 165. There's supposed to be some type of court ruling on the tariffs at the opening bell. We'll see what that looks like also here. 25 minutes left. You can see the release of the data here instantly. We cover it as soon as it drops right here. Again, it drops in about 23 minutes. PPI expected at 0.3% for headline and core month over month. Bitcoin is leading up into PPI today, fragile. Well, doesn't it that Bitcoin and crypto people want easing? They want easing, and so yeah, they want easing, and so low inflation would make Bitcoin go up today in theory, correct? Crypto people, correct me if I'm wrong. I'm in crypto, I'm in Bitcoin, but I don't know what the wave of investors want now. Jim Cramer says Oracle is a meme stock. Yeah, Jim Cramer says it's a meme stock for Oracle. Honestly, it's behaving, and when Oracle from their earnings again is up 30+%. That's a wild increase. Maybe not quite 30% now, but that's a wild increase overnight for a company the size as Oracle. Yeah, lower inflation will make Bitcoin better because that's more optimistic towards easing. Yeah, Jim Cramer's probably more of a meme, yeah. Yeah, I don't know if Robinhood's a meme stock. I think Robinhood's pretty strong, but higher inflation thinks we'll get a 50 basis point drop, so market is irrational. Yeah, but higher inflation means less optimistic for stronger cuts. Personally, I think we're going to cut 25 next week, regardless of what this data shows up as, unless it's like really, really high. Yeah, unless it's really, really high. I don't know. Gold's flat. Still close to all-time highs, though. 25 basis point cut priced in. I don't get why a lot are bullish on a cut. They won't cut rates. Yeah, no, I know. So again, in order to cut rates, we need price stability. We need low inflation. And I don't necessarily know if we're going to get that. The last PPI report's bad. CPI will be interesting to see if some of these prices get passed on to consumers. And again, I don't know. Today's PPI inflation report will be really important. We got 20 minutes left too, chat. 20 minutes. Hit the live button next to the play button. If you put it in 2x speed, you'll catch up to the stream immediately. So, yeah, put it in 2x speed and hit the live button. We are in crypto. We're playing for lower than 3.3%. Yeah, I mean, 3.3% year over year is not the number you want to look at. You want to look at the month over month reading. I mean, the year over year number matters, but the month over month increase is going to be the most up to date, like real time look at what's going on. Not quite real time. Let me clarify, but still, the month over month reading is probably what you want to pay attention to. Look at wholesale inventories that come out today as well. Okay, so again, stock futures trading mixed. S&P, NASDAQ are higher. Dow down slightly. Again, investors are mostly waiting for today and tomorrow's inflation reports. Headline PPI expected to rise 0.3%, sharply lower than the 0.9% jump last month. Core PPI also to increase 0.3% if it shows up as expected. Gold still near record highs. Dollar gains despite weak job outlook. Again, yesterday we revised jobs down, the largest ever for the benchmark revision at over 900,000 jobs revised downward. It was the largest in history. Still, odds of a 50 basis point cut decreased on yesterday's revision report. It's still looking pretty probable that we're going to cut rates 25 basis points as of now, but this inflation data could swing it. We will see. Yeah, this inflation data could swing it. 17 minutes. Japan jobs data, or not Japan, see, AI is wrong. But jobs data up to March 2025, decreased by over 900,000. Again, a lot of the time, this is, remember, PPI is wholesale inflation, right? It's producer inflation, it's business inflation. And so eventually, a lot of the time, these prices get passed on to consumers. And so that's something we might see today. I don't know. Are you guys bullish or bearish on this report? Let me know in chat right now. We did a poll asking people what numbers these would show up as. 55% think higher, 21% think lower, 24% think we're going to show up as expected. Are you guys bull or bear? But either put a bull or bear number, or put a bull or bear in chat if you're bullish or bearish. Let me know. Bearish, bearish. A lot of people worried about a recession after yesterday's job numbers, and I think we saw some banks. We saw a bank say that we have a 35% chance of hitting a recession next year. Bearish. Almost everybody's bearish on this report, which is interesting. Let's see. We got 1, 2, 3, 4. 1 out of 4. 2 out of 4. Dude, almost everybody's 3, 4. Yeah, we got like, I would say we got like 15 bears and maybe 3 or 4 bulls in the chat. Again, Oracle up 30%. Nvidia pumping up a little bit as well. Nvidia finally starting to come back up here. It's been in this range. You can kind of see Nvidia's longer term movement, where Nvidia's been moving down for the last month. Finally starting to heat up a little bit. It's at 175s now. People are still worried about an AI bubble, but look at Oracle, man. Oracle is just pumping markets right now. Gold falling down a little bit ahead of this report. Gold seems to be kind of moving in a macro way with markets. Lower rates for crypto. Someone suggested Bitcoin follow gold now. Market takes everything is good. Sky is falling. Yeah, but here's the problem. I've said this before, I'll say it again. Universally in markets, right? Here's the real problem a lot of people face. And again, I'm going to preface this with saying, I am not saying we're not going to crash. I'm not saying we're not in a bubble. But one of the biggest issues that I see in markets a lot of the time here, one of the big issues I see, is that people tend to constantly overpredict crashes, right? People that miss out on big bull runs like the latest AI boom, they might have confirmation bias that, hey, I didn't really miss out on anything because the market's going to crash anyway. And so there are a group of people that overpredict crashes. People tend to get scared to reinvest in things because they're worried about a crash, right? And if they do get scared out of reinvesting, they tend to overpredict crashes, right? And so in general, universally, no matter what time it is in markets, crashes are wildly overpredicted, you know? And I think you have to understand that. You know, you got to understand, crashes are overpredicted in markets, man. That's just how it goes. That's the nature of crashes, is that they're overpredicted. And so, but sure enough, we do sometimes get them. It's not like we're not going to ever burst the bubble here. But it's a lot of the time less often than retail thinks that we're going to pop a bubble or crash. Most of the time when we're at all-time highs, we actually continue up. And so people like to reference all-time highs and evaluations. I get it, but This time is different. Yeah, no, you might be right. I don't know. Again, I'm not saying we're not in a crash. We are up in our gold position here, though. Like, if I put up gold, we're up about $200. I'm going to take another piece off. Oh, dude, how did I just get out? I'm up 750 on the day in this. I wanted to buy a dip. I didn't want to get out both sides here. What happened? Oh, well. I'm up 750 on this. That's cool, I guess. I will buy a retracement into this data here. You know what? I'm going to buy this. I'll come back to this. I want to watch the NASDAQ here. Yeah. I want to... We'll see what happens. AI taking everybody's jobs. Permabull. Most of the time, the permabulls are right. You know, I've only really called one. I've only really been scared enough to exit positions. At the end of last year, I got out of a lot of positions, and then I added back on the big pullback we got in. So I was actually right about the only one that I've done. But you guys know me, I'm not somebody that overpredicts crashes. I'm just not. I know crashes are overpredicted. People miss out on big runs and then like to overpredict them because they want to pretend that they didn't miss anything. They're like, oh, I didn't miss the AI boom. It's not going to hold anyway. I was like, yeah, well, maybe you're right. But hey, thank you. Does America have with 10% decline in the dollar? So I don't know. I think it depends on how you look at it, right? I think you're referencing, is AI gonna destroy everything else? Is basically what you're asking me in a different way. And I think in some ways, yes. I think AI is gonna replace a lot of jobs. I think it's gonna create jobs as well, but I think the net effect is gonna be negative for jobs. Sure. But I think other industries are gonna sprout up from it, and so it's gonna be. I don't think it's going to be as destruction influenced. I don't think it's going to be as destruction heavy as a lot of people expect it to be. But maybe I'm wrong. And listen, internet was the next big technology, but it replaced a lot of jobs at the time too. And we had one of the longest bear markets in history when a lot of those crazy valuations didn't hold. It's certainly possible we see a similar thing with AI. I think long term we're going to be fine, but short term, you know, no freaking idea. But I appreciate the $5. Thank you, sir. Appreciate it. Wait, I'm just tuning in. Is John predicting another pullback? No, not really. I don't know. I think it's possible for sure, but I don't know. Yeah, I think it's possible. But I really don't know whether we're going to or not. You know, no idea. I'm not as like last year. I was confident. Like I ended up liquidating a lot of stuff because I thought we would dip, and yeah, I'm not really there yet now. All right, so Wells Fargo CEO Charles Scharf says volatility in markets is extreme on CNBC. He said, I think the current administration is entitled to be vocal about the Fed. Fed should be independent on CNBC, he said. All right, guys. Hey, we got 8.5 minutes here. Make sure you hit the live button next to the play button. Make sure you're fully caught up on stream. Did I sell my gold position ahead of this? What do you guys think? We got enough range, though. Like, we're up. But we're getting too close to this for comfort. I think I'm just going to sit on this. Here's the NASDAQ. You continue to watch gold right here. Actually, let me see. Yeah, I'm going to sell this and hold some micros, probably. Yeah, now we're up $850. So I got a big cushion. We're up $850. Probably end up buying some micro gold here. A couple small pieces. Oh, these are gold futures, so these are day trades of gold. All right, guys, 7 minutes. We got 2,100 people here. 7 minutes left. This is the next PPI inflation report. Last time was crazy high. Crazy high. Oracle pumping markets right now. I don't think it cares about PPI nor CPI. I think the bulls just took control of what? Government is turning to Bitcoin and stablecoins to pay its debt. Yeah, I saw that. I see that. Yeah, generally CPI comes before PPI, but not always. It depends. I think PPI is probably better first this week. Based off of like how high, like CPI was pretty flat last time. PPI was shockingly high last month. And so I think it's understandable PPI comes first this time, but we'll see what happens. What's your number, guys? What do you guys think we show up as month over month for PPI headline inflation? What do we show up as month over month? Five and a half minutes. Guys, listen, put it in live mode. Hit live button next to the play button. Make sure you're fully caught up on stream. Hit the live button, put it in 2x speed. If you put it in 2x speed, you won't be delayed. And so if you put it in 2x speed, when the data comes out, you won't be delayed. Hit the live button next to the play button. I appreciate it. Hey, thank you, Sergio. Appreciate the love, man. Thanks. Yeah, appreciate the donation, bro. Thank you. All right, guys, we got 5 minutes, almost exactly 5 minutes left here. Good day at school. 5 minutes left. Yeah, Bitcoin still consolidating last few days. NASDAQ falling down, gold pushing up a little bit. .2%, 0.5%, 0.1%, 0.8%. I would usually criticize people that give like a 0.8% prediction, but I think this time, based off of the last numbers, I think it's more understandable now, at least. So India's trade minister is in active dialogue for a trade deal with the United States. All right, guys, here we go. 4 minutes left. Chat, 4 minutes. Time. Yeah, previous a 0.9% for both core and regular month over month. Yeah, so PPI expected year over year today. Remember, PPI year over year today is expected at 3.3%. Chat, 3.3%. Previous of, what did they show up last time? 3.3. Okay, yeah. Yeah, core PPI is expected at 3.5% year over year. Previous of 3.7%, right? All right, guys, get ready here. It's almost time. We got 2.5 minutes left. Again, higher number means higher inflation. It's less optimistic for rate cuts. Lower numbers means less inflation. It's more optimistic for rate cuts. Higher numbers will push rate cut odds back. And again, hit the live button next to the play button. Hit the notification bell. We'll appreciate the support. Hit the subscribe button. We do this live for free every day. Live right here on YouTube. We don't sell a course. Don't sell a service. Don't claim to be experts. We don't even claim to be good traders. We put everything out there for free. You're welcome. We got 2 minutes left. Again, 2 minutes. 2 minutes. Hit the live button next to the play button. Put it in 2x speed. I'm going to put gold up. I'm going to put the dollar index up here. I'm going to put the 10-year treasury yield number up here. I'll put Bitcoin up, actually. Bitcoin futures. 113s. Dollar index, gold. There you go. Great graphics right there. All right, guys, we got 1 minute left. Hit the live button next to the play button. Put it in 2x speed. Oof. See what this number shows, man. I'm kind of nervous, honestly, dude. The last numbers were not good. Hit the live button next to the play button. Put it in 2x speed. We will see what we get. We got 1 minute almost exactly left. All right, guys, 50 seconds. Hit the live button, guys. 2x speed. Headline PPI expected to stay the same at 3.3%. Well, yeah, that's expected. All right, this timer's a little bit early. We got 30 seconds. We got 25 seconds. Again, put it in 2x speed. Hit the live button. You'll be caught up. 20 seconds. Ten seconds. About 6 seconds left. All right, here we go. Here's the report. 2-1. Okay. Wow, the market is flying up right now. Absolutely flying up on this report. Wow, look at this pump here, guys. PPI declines 0.1% in August. Services fall 0.2%. All right, so again, PPI data declined 0.1%. Final demand prices advanced 0.7% in July, 0.1% in June. August decrease in final demand index, 0.2% decline in prices. Wow. And NASDAQ is loving this. Look at gold spike up here. Chat, wow. 0.1% decline for PPI month over month. 0.1% down. PPI month over month. So we actually declined a negative 0.1%. Crazy. NASDAQ is loving this. Again, that's crazy. Core PPI showed up at negative 0.1% as well, man. So, wow. A decline in prices. So this is going to open the door to rate cuts drastically here. Look at the NASDAQ. My gold position doing really well. Again, year over year, PPI showed up at 2.6%. 2.6%. Versus expected 3.3%. These are shockingly low numbers here. I guess we didn't show up as expected here. Because, man, dude, these are shockingly low numbers. Again, negative 0.1% here. Negative 0.1%. Wow. Negative 0.1% for both core and regular month over month. This should dramatically increase the odds of rates. Crazy. 2.6% year over year for regular. Month over month negative 0.1%. Month over month core negative 0.1%. Again, PPI demand year over year 2.6 versus 3%. Yeah, let me look at yields right now because look at these numbers here. I think we got to look at yields right now. NASDAQ did like this data. We are up dramatically on this. I'm sure yields are going to fall now. Odds of rate cuts are going to go up dramatically. This is a situation where maybe we'll see 50. I still think it's less likely, but it's possible. Look at yields go down. Look at yields fall on this data. Again, gold did go up as I thought it would, which is good. I thought gold would go up regardless of the number here, but man, what a wild report here. This is 2 consecutive crazy outside of expectation numbers. Again, year over year core showed up at 2.8 versus 3.5. Again, this is 2 months now where we've had wildly outside of expected numbers here. Again, let's read this report. But man, negative 0.1% for both. Final demand 0.2% decline in prices. Final demand services. Index for final demand goods inched up 0.1%. Prices for final demand less food, energy, trade services rose 0.3%. The 4th consecutive increase for 12 months ending in August. The initial final demand less food, energy 3.5% in March. Oh wow. Yeah. Wonder what this is going to do to gold. Dollar index is down. Bitcoin is flying because this means maybe more potential easing. The NASDAQ is flying up here on this report too. Wow. Yeah, so interesting. Let's see if the CME watch is the... I haven't seen the CME watch tool. Yields are down from this report as they should be. Here, let me get all these things out of the way. Yields are down. So I think maybe we'll see 50 basis point cut odds increase and this decrease now from this report. Most likely. We'll see. Let's end this poll and do another poll. Are you bullish or bearish on this data? Now we're going to do another poll here. All right, so with lower inflation data, are you bullish or bearish this morning? Let me know in chat right now. I'm going to put the poll up so you can vote directly on the poll. Yeah, I'm still waiting to see if the CME watch tool numbers are changed here. They're nothing yet, but again, you can look at yields. And see, yields are lower. Although they have gone up a little bit, but yeah, they're down. Look at yields. Here's where the report came out, right around here. 4.068% right now for yields. Are the numbers correct or manipulated? I don't know. Rate cut is bad? I don't know about that, man. I think you got to look at it like... if we have weak labor and weak inflation, it's probably time to cut. You know, I know a lot of people were pushing for pauses or whatever. They didn't want us to cut rates next week. This data basically confirms a rate cut, right? Now, this data will probably make 50 basis point odds increase. I don't know if I still think we're going to do 25, but it depends on CPI data tomorrow. Arguably, CPI could be more important than this data, right? CPI is consumer prices. These are business prices. So arguably, CPI tomorrow could be more important than this. We'll have to wait and see. We don't really know. But yeah. All right, we did the poll here. We're asking people. We're still watching this market reaction. Dollar index is back up. 77% of people are bullish. 23% are bearish. Bro, there's 3,200 people here to bet. I'm sorry if I missed your previous comment, sir. Not intentional, bro. That we just got over 3,000 people here commenting. I'm doing my best. I'm trying to catch up on everybody. Yeah, CPI tomorrow is very important. Again, I don't know how you could argue not cutting next week right now. I don't know how you cannot argue that. Unless the only way you could is if CPI tomorrow shows elevation, right? I still think people are going to argue it's a short-term elevation based off of today's wholesale price report, right? I think based off of today's PPI report, even if we do get elevated CPI, I think people are going to argue it's not going to hold. Eventually, you know, the prices are going to decrease a little bit. And so, not decrease, slow. But I don't know how I don't know how we should argue no cut now. Largest revision in history in the benchmark revision yesterday. 900,000+ jobs revised down. Every single non-farm payroll report has been lower than expected. 22,000 last Friday for the NFP report, labor report. Unemployment upticked 0.1%. The previous unemployment report revised May and June down 268,000. And so we've seen a lot of weakness in labor. We really have. PPI inflation is low. It's all going to be depending on CPI tomorrow. We're still not in a recession according to you. Yeah, we're not in a recession. We're not. We don't have 2 consecutive losing GDP quarters. So unless this current quarter, or unless last quarter 2 GDP turns from what was a 3.3% GDP growth all the way to a negative number, we're not in a recession right now. Just by the technical definition of a recession, you know, we're not in a recession. And if you were one of those people a few years ago that are like, oh, bro, they're not going by the technical definition, you can't stray from that now, bro. You got to stick with that because we're not technically in a recession right now. Maybe we're heading towards one. You know, you can't say your grandma's cousin's uncle's, friend is doing poorly, so we must be in a recession. No. We have weak labor. Don't get it twisted. We really do have weak labor market, but we're not technically in a recession yet. We might be heading towards one. I'm not arguing that, but we're not in one now. 8:30 tomorrow, bro. 8:30 Eastern Standard Time. The same time as today. We get a mirroring report tomorrow. And it's all love. I'm just kind of messing with you guys because I've heard both sides. I'm very neutral politically. People like to get political about all this stuff. I'm not political at all about any of this. I don't care about any of this stuff. I'm just going by what I think the market needs. I think it's been somewhat ambiguous, but I think now it's obviously trending more towards we need to cut. I don't think we should do QE. I don't think that's necessary. I think that's going to cause inflation. I think we should just lower interest rates. All right, guys. So the Pentagon's chief spoke with China's Minister of National Defense. They said the U.S. does not seek conflict with China and that he made it clear U.S. is not pursuing regime change. John, you don't think lowering interest rates will cause inflation? Not in the way where it's a huge risk. I think if we do quantitative easing, money printing, that might cause inflation, or that probably would cause inflation. But I think you have to be proactive with rate cuts and do it before we enter a recession. And I think if we have low inflation data to justify it, we should probably start cutting rates. I think you could also argue ending quantitative tightening on mortgage-backed securities. I think if you want mortgage rates to decrease quickly, that's one of the ways you can do it. And we're still doing QT, which is a restrictive monetary policy on MBSs and on treasuries, although we reduced treasuries by 80%. And so I think if you want to bring interest rates down in that regard, you can do it there. And maybe with price stability, we'll see a little bit of ending QT, but I don't think we should do QE. I think that's the bigger risk to inflation. I think if we cut a 25 basis point cut, it's not going to be incredibly risky regarding inflation as of now, but it could be. You never know. It could make it worse. It just depends on the nature of the economy. All right, guys, NASDAQ is still elevated over 24,000 here. I think we should watch 24K. Again, if you want to check out a sponsor of mine, I have one sponsor. I'm very biased in their favor, but they're genuinely useful. Check out Top Step. If you want to learn to day trade, do not fund your own account. People might encourage you to. Honestly, it genuinely makes no sense. Most day traders lose their first couple accounts. And so why would you deposit $5,000 trying to look cool and just destroy the account? It makes no sense. Instead, try Top Step. $50 a month for the base. When you pass it, you get a 50K funded account. You get to keep your first 10K afterwards and 90% following that. Similar to funding your own account, if you fail, you lose $50. It's not the end of the world. It's the best of both worlds. Limited risk, similar reward. They pay out millions, fund thousands. Genuinely useful. Zero commission on Top Step X. I wish I had something like this when I first got started. And most day traders are going to lose, regardless of where you go, including here. Most day traders are going to lose. Frankly, it's a lot cheaper to lose here as a new trader than it is to fund 5, 10, 20, 30 grand trying to look cool. And again, they just debuted their back to funding option, so you can now reset funded accounts as well. Great way to learn how to day trade in a structured environment. You're still probably going to lose day trading, but it makes more sense to do it this way. I'll put the link up. Great way to learn. I'll pin it to the top of the chat. They're a sponsor of mine. I am biased because I get paid by them. Top 3 most biased ever. Understand all this stuff on screen. I can't guarantee anything. I'm not an investment professional. I don't even claim to be a good trader. Don't copy me. Sometimes I have no idea what I'm talking about. Don't copy me. Understand all this stuff. Top 3 best disclaimers in the world right now. But yeah, gold stagnant. I don't know if I want to buy it or sell it. With low inflation, I guess I'm just going to wait for gold. I got out of my position now on the day on this account that we've been trading. Actually, we lost a little bit on this micro gold position. I could add to it and try to rebound it back up. I don't know what I want to do here. We're right at the 200 exponential. I don't really like that. See where gold's going to correct back down, but all right, guys, we did a poll. 76% are now bullish on the day out of 1,000 votes. 76% bullish on the day out of 1,000 votes. Again, PPI data better than expected. Decrease in PPI inflation month over month. What did I miss? You missed a really low inflation report. Making people optimistic is what you missed. Listen, guys, I know we got people saying they're fake numbers and all this different stuff, guys. Listen, if you didn't say the last numbers were fake when they showed super elevated 0.9% month over month, you can't say these numbers are fake either, brother. Nobody calls fake more than somebody that's wrong about a prediction, okay? I see it firsthand. And again, it's all love. Hopefully you don't judge me too much for this comment, but you know it's secretly true. Nobody yells manipulation. Nobody yells fake numbers more than somebody that's wildly wrong about a prediction. And I'm here to say this again. Nobody knows what these numbers are going to be ahead of the time. Nobody knows. Nobody knows if they're going to come in super high, super low. They vary wildly. Yeah. And so it's all good. It's all love here. But come on now. We got to look at the numbers. We can't say fake every numbers. I get it from both sides, unfortunately. You know, we get high inflation showing less likelihood of rate cuts. People yell fake. We get low inflation data showing more likely for rate cuts. people yell fake on the other side. Either way, cheers to the fake callers, I guess, because, you know. Either way, it's all good. You know, I appreciate you guys being here, even if you're screaming fake numbers every other comment. But yeah, numbers super low, negative 0.1% PPI year over year for core and regular. Shockingly low versus a shockingly high PPI report tomorrow. Again, CPI is going to matter a lot. I mean, I understand how there's such a large variance from last month. Because month over month has variance, you know? Like some months we're going to see prices rise. Some months like this last one, we're going to see prices fall in wholesale prices. CPI prices or consumer prices, those are usually a little bit more resilient, I should say. But all right, gold breaking down here. Still think the market's waiting for CPI inflation this time. Usually CPI comes out ahead of PPI, but I think the market might be waiting for CPI this time. We are seeing some reactions here. NASDAQ is up. Gold is down, but maybe the market's waiting for CPI. We'll see. Oh, wait. I don't think I put it up on the bottom of the screen. My bad, guys. Hold on. I got you. Hold on. There we go. There's the numbers on the bottom of the screen scrolling now on the bottom. Negative 0.1%. I don't know, bro. Honestly, I like Diego Lopez. But Silva, that dude's a scary dude, bro. One of the things I like, I've been drilling more in my training, is the ninja choke. Right, it's kind of like an arm out Darce. Or no, it's an arm out anaconda choke is what it is. But Gene Silva, bro. That's a scary dude. He finished Bryce Mitchell, you know. I don't think Diego is winning with an arm triangle. I don't. I think that's pretty far-fetched here. Yeah. All right, guys. NASDAQ's coming down. I look like Bryce Mitchell, bro. Come on now. Yeah, we got weak news, bad job numbers, weak inflation data. What do you guys think this means? Are we headed towards a recession? I'm a blue belt. I'm a mediocre blue belt. I do like guillotines. Bro, for my first year of training, I guillotined everybody, dude. I've kind of strayed away from it. I got too one-dimensional with it, so I tried not guillotining people. But give me an arm-out guillotine all day, I'll take it, you know. Anyways. John, will the NASDAQ pump at the opening bell? It might. It might pump. We don't know. It could. That's like asking me, you know, I don't know. I couldn't think of an example, but that's a very variance heavy answer. Will the market go up or down at the open? Nobody has any freaking idea, except maybe Warren Buffett or big money or billionaires. They might know, but outside of that, I have no idea what the market's going to do at the opening bell. We could pump up. What we've seen a lot recently is we've seen numbers show up at 8:30, and we've seen minimal reactions at the 8:30 release, and then we get kind of some movement ahead of the opening bell, and then at the opening bell we get continuations of the outcome movement, meaning like low inflation market goes up, weak inflation market goes down at the bell. I'm not saying that's going to happen here. There's a lot of variance from it, but it could. We'll see. I'm watching for it at the opening bell. You think I look like the I Love College guy? Is that him? Most people here are probably too young to remember that. You're basically telling me I look like Michael Cera, though, right? Let me see. I can't remember what this guy looked like. Hold on. All right, look at the dollar index spike. Dollar index at 97.80s here. Vimeo is going to be acquired by Bending Spoons for 7.85 a share in cash. Bending Spoons. Is that a Matrix reference? Is that the name of their company? I like it. Al Irian says if he was on the Fed board, he would seriously argue for a 50 basis point cut at the September FOMC meeting due to the labor numbers, according to on CNBC. He said this. Right, I feel personally attacked about the, you know, Michael Cera, Asher Roth, whatever the dude's name is. All right, market's completely flat here. Look how sideways the market is, dude. The market has maintained a very tight range. Look at this. That's some sideways chop in the NASDAQ here. This is the NASDAQ. Yeah, this is the NASDAQ. That's some choppiness. Let me see if yields have changed at all. Let me see the CME watch tool. It had to move a little bit right now. I've waited to look at it. Yield's actually up a little bit. Interesting. Okay, yeah, so what we've seen now is we've seen 50 basis point cuts go up back to 10% here. So now we have 10% odds of a 50 basis point cut. We've got 90% odds of a 25 basis point cut. So it's still pretty probable. Again, I don't think we're going to see changes in this. I think we're going to cut 25 next week, most likely here. Most likely. All right, guys, we're almost at the top of the hour. Almost here. Kind of nervous for the opening bell today. Gold's still pushing up. Yeah, I think we're too close to the September meeting to make any type of big pivotal change. Even if we get super high inflation data tomorrow, I think it's still going to be probable that we're going to cut rates next week. I don't think they're going to change it this much week to week. I just don't. If CPI comes in lower, 50 basis points on the cards, that's true. Maybe. I think we might see something like PPI or CPI come in higher, though, because the last PPI report was higher, and a lot of the time those can get passed on to consumers. And so I think we could see something where we got CPI higher, PPI lower, which is going to be a net neutral, which is going to mean we're going to stay the same in terms of odds for rates. But I'm just speculating. I really don't know. What do you guys think? Yeah, PPI negative 0.1%. It did get revised. So they revised last month down 0.7 versus 0.9 is what they originally showed. They originally showed 0.7 or 0.9. Now they got it revised down to 0.7. So a 0.7 revision here for PPI data. Again, PPI did get revised last month. They revised last month down slightly is what we're showing here. Instead of 0.9% month over month for core and regular, they showed 0.7% now. Also, core PPI got revised down from 3.7 to 3.4%. Last time was 3.3 for headline year over year. It's now 3.1%. So we did see revisions. Yeah, people are going to be worried about recession numbers. And again, I'm not saying we're in a recession, but people are going to get nervous about that moving forward now. Like, people are going to get nervous about a recession coming. Again, I'm not saying we're in a recession. What I'm saying is that we could be heading towards one based off of this data. Good for the consumer. People were terrified the same way in 2011. Well, I don't think it made much sense to go into a recession in 2011. That was only a few years after 2008. And so we already had that recession. It's less likely we're going to enter two separate recessions within a 2 to 3 year period. I think this time is different. We haven't really been in a recession. It depends on which, like, technically we went into one 2022, but it only lasted a quarter and then we got out of it. And so yeah, recession. I mean, when the market goes down, that's typically when people start buying. Recession doesn't necessarily mean weakness in the market, though, like a lot of people are saying. Well, the recession fears are because labor's coming in incredibly weak, right? Labor data super low. Revisions are big. That's why the recession fears are kind of getting ignited based off of even the low inflation today could mean we're heading towards one now. Again, people always like to say we're in a recession because either they're not doing good or they're having a problem finding a job, but it needs to, it's too specific. Like, it needs to be more generalized in terms of everybody. You know, there's a textbook definition, and it's 2 consecutive losing GDP quarters. Now, quarter 1 was negative 0.5% GDP for quarter 1 of 2025. Quarter 2, I think we're on the 3rd and final number. I don't know when that drops. Let me see. September 25th is when the next GDP drops. The previous one saw 3.3%. And so unless we drop from 3.3% GDP, right? Unless we drop from 3.3% all the way down to a negative number, we're not technically in a, you know, we're not technically in a recession. All right, so Amazon is reportedly developing augmented reality glasses in a challenge to Meta. According to the information, they're working on 2 AR glasses, one for its delivery drivers and one for consumers. UPS and American Express announced a collaboration at the intersection of logistics and payments. And we also had US Steel, or United Steelworkers Union, expressing cautious optimism over the proposed merger of Tech Resources. We also had the US Energy Secretary Wright says the commitment from the European Union to buy more energy from the US is a win-win. Yeah, I mean, look, you got to look at it like this, right? Either way, there's reasons to be optimistic. I think if you look at like a CPI inflation graph, and I show this graph sometimes here just so people can kind of understand, right? Here's inflation, consumer inflation for the last 20 years, right? This is 2020. During 2020, the economy was in shambles. The Fed lowered interest rates, printed a bunch of money, sent out stimulus checks. We had supply chain problems. And so inflation grew by 2022 up to almost 10%. Then they did a bunch of restrictive monetary policy. They raised rates. They did quantitative tightening, which they're still doing. And then you can see inflation start to slow. Right? That's why a lot of people are unhappy now. And I go over this pretty regularly. That's why a lot of people are unhappy now, is because we got such massive inflation here. Right? This is why people scream we're in a recession, is because they're not doing great. And I'm not saying, you know, people are doing great. What I'm saying is that we're not in a recession. Most people are unhappy because of the opposite of a recession, which is inflation spiking up massively. The only time prices literally go down are generally in recessions or worse. Okay, so you can see the only time prices really, outside of maybe here, but it didn't stay very long at all. The only time prices have actually gone down, literally, is 2008 financial disaster. And so even if we do get a recession, maybe it's going to ease prices a little bit. You know, maybe we'll get some stability in prices in longer term. But yeah, that's basically what people have to understand. Morgan Stanley co-president says there was a huge backlog of M&A deals. All right, we're in our gold position here. We're up really nicely. We're going to kind of take some off here if we can. There's one. We're up about 1,000 in this account on the day. Just mostly attacking gold. I haven't really traded the NASDAQ. Gold can behave in more of a choppy way than other stuff. The range is a little bit larger. But yeah, we're up about 1,000. I'll hold the rest break even, I think. For the time being, I'll put the NASDAQ, which might come sooner or later. Here, look at this breakdown. Yeah, we're gonna cut it right there. Break even. Oh, still up about 1,000 on the day. We'll put the NASDAQ back up here. All right, guys. See if there's any breaking news. Amazon is developing AR glasses. Vimeo buyout. We've talked about those. Barclays lift S&P 500 price target on AI earnings strength. They raised S&P targets, citing strong earnings momentum, AI-driven growth, and resilient corporate performance despite labor and trade risks. They now have the S&P 2025 target at 6450, 26 target at 7K. What's the Rolex price target saying? Oh, the Rolex target is saying we've been on a move up since this year for Rolexes. Still down. Here's like, you got to think about it like this. For Rolexes right here, right? This is the 2020 stimulative economy here. So this is all 2020, low interest rate environment. Rolex prices doubled in this period of time. Stimulus checks, all that stuff made Rolex prices bump. Eventually, we've seen a correction here, and now we're starting to move back up a little bit this year. So if you're asking me if Rolex prices signal too much inflation, not really. We're pretty much flat for the last year and a half in Rolex prices. Hims launches new category in men's health with exclusive branded oral test and expanded personalized treatments. I'm in Hims, and it's up. We're in Hims at $41 a share, basically $40 a share. It's now at 50. We are up 25%. You'd love to see it. You know what I bought a few days ago that's doing good too? Marvel, MRVL. Look at Marvel. We bought Marvel. Our entry price on Marvel is 62. It's at 67. It's almost 68. This year in 2025, Rolex has been bullish. I don't know. Tomorrow morning, if you want my CPI prediction, I'll give it to you tomorrow. Our PPI one was wrong. I thought we'd be flat. We showed super low numbers. All right, the president said just out, no inflation. Too late, must lower the rate big. Right now, Powell is a disaster. Who just so again, president's tweeting again. Also, guys, give me a follow on x.com @beginnertrades. We publish all this stuff live every single time we get big data drops. We had our largest tweet ever. Here, look at this tweet. We got our largest tweet ever here. Look at this. We got 32,000 views for this tweet yesterday. You love to see it on the benchmark revision. We publish all this stuff live @beginnertrades, BEGINNERTRADES. You're welcome. Give me a follow @beginnertrades. Yeah, Bitcoin, I'm assuming, is up big. It should be. Yeah, it's up to 114s. Bitcoin wants stimulus. You got to remember. Yeah, I'm not here to say whether the president's tweet is good or bad. I'm neutral on all that stuff, guys. I don't copy all that. I don't do any of that stuff. I'm neutral politically. I think you could argue a rate cut for sure now, though. And I think this is all but guaranteeing a rate cut next week. It's all down. Core is negative 0.1% month over month. So is headline PPI inflation. What's your predictions for tomorrow, guys? A lot of people are on cash earning 5 rate with no risk. Yeah, I mean, if you take a look at rate odds here, they are decreasing, you know. Meaning lower interest rates. If you take a look at yields, yields are down from this report. Here's the fall in yields. And remember, yields and interest rates follow each other, right? So if you want to see what interest rates are potentially doing, you can watch yields. And yields are down. They're down to 4.06%. We're headed towards 4%, under 4. And so we'll see if we actually hit that or not. But yields are down. Lower interest rate sentiment. Here's 24,000 on the NASDAQ. We might start trading that too. Meta down on Amazon. I don't know. How competitive do you think Amazon glasses are going to be, though? Yeah, like how competitive do you think Meta glasses or Amazon glasses are going to be versus Meta? I don't know. Personally, I don't think they're a huge risk as of now. We'll have to see what they develop, though. One's retail, one's tech. I'd bet on the tech company, but, you know, we'll see. Ooh. All right. 15 minutes until the opening bell. Let's see what we get. Let me make sure we don't have, yeah. Also, inventories at 10 a.m. today, too. Wait. I'm looking at MarketWatch. Does MarketWatch have the data wrong? MarketWatch is telling me that core PPI should have been 0.3%. I think that's actually wrong. Yeah, negative 0.1%. 2.8% of the year, negative 0.1%. All right, guys, we got 14 minutes into the opening bell. 14 minutes. We're going to be day trading at the open. Remember, we got CPI inflation coming soon, too. I appreciate you guys tuning into my channel for these data releases here. My views are getting better and better. I appreciate the love. We had almost 4,000 people here for PPI inflation. You love to see it. Thanks so much. Got almost 20,000 views total for the stream. We appreciate you guys. Let's keep the growth up. CPI tomorrow. That's big for a PPI stream. CPI tomorrow. NASDAQ over 24,000 here. Nick loving the numbers. Top 3 worst, you know, streamers in the Texas community, I guess. I don't know what to say there. Top 3 best ever, though. Over 24,000 for the NASDAQ. Marvel's still pushing up. Bitcoin's still pushing up on more potential easing here. Did we have good or bad PPI? I would argue it's good. Low inflation is generally good. If you want rate cuts, definitely good. Yeah, definitely south of the Mississippi. Greatest ever. John the Kind? Definitely kind. Kindest ever. Support that nickname. People say my office looks like a kitchen, so I like either John the Kind or the Cook of Wall Street, you know? Although the Cook of Wall Street might sound a little devious, you know? I find it hard to believe the market hasn't priced in rate cuts for gold yet. Yeah. Yeah, so if you want to see what drove these decreases for the month, right? If you want to see what drove these decreases, it was mostly services down 0.2%. Commodities were up 0.1%, so the net effect was negative 0.1%, right? But yeah, this was a decrease in services. Deutsche warns of a bubble risk in the S&P 500. Right, that's why I said it sounded devious, Nick. Although people always say my office looks like a kitchen. Top 3 greatest kitchens ever here, though. Look at this. Come on. If it's a kitchen, it's a nice kitchen. That's all I'm saying. I'm messing my camera up doing this, but yeah, if it's a kitchen, it's a nice kitchen. All right, we're heading up on the NASDAQ here. We're pushing up. Let's see if we hold now. Do you read any of those books? No, I use them as karate punching devices. Marvel starting to head up. We're at almost 68 for Marvel. Look at this. So we bought Marvel. Might start to liquidate just a little bit of the position here. Where's Apple at? Apple had their event yesterday. They're still red on the day. I don't know. Should I sell some Marvel? I mean, we're up so much so quickly. I think I have to sell a little bit. Alright, we're gonna sell some. Top 3 fakest readers ever. Yeah, that's true. Definitely fakest ever. NASDAQ up to 24,000 here. Again, we're waiting for the opening bell. We got 10 minutes left. We'll see what happens. 9 minutes, actually. Looking at our poll, 77% of people are bullish on this report. And we're pushing up. We're over 24,000. I think 24,000 is probably a reasonable level to watch just in terms of like milestone. 24, big whole dollar number, whole big milestone level. So we're slightly over that now. We're not over it enough to be super optimistic, but maybe we're going to get a late reaction to the PPI low numbers at the opening bell with bulls coming in. It's very possible. I'm not saying it's going to happen. There's always variance, but it's possible. No, the house we were going to buy prior to this house, right? I'm still kind of disappointed. The house we were going to buy prior to this house, bro. We had an offer accepted and everything. They never fully executed the offer though. You know? So like we put an offer in, they countered, we accepted their counter, and then they never locked it in, unfortunately. But that house had a secret passageway in the office, like a literal spy. You could pull a book down, the library would open up, and you would have a secret passageway in the office. I wanted it so bad too, bro. We waited for them to accept that offer for like a month, and they just kind of sat on it. I don't think they wanted to sell, you know. Still mad about it, to be honest. That was years ago. This office was bigger though, and I don't think I would have been able to fit my computer, to be fair, in the secret passageway office. It's all right. I accept it. Still mad, but I accept it. Yeah, Bitcoin almost up to 115s. Let's see if it hits it or not. We still have this 2410 level rejecting on the NASDAQ here. So what happens if Powell at the last minute says no rate cut until next meeting? Chaos, I think. I think if we don't cut rates next week, market's going to freak out. And they're going to freak out because they're going to assume we're headed towards a recession if we don't stimulate the economy right now based off of the payroll numbers, right? Like, I think if we do not cut rates next week, market's going to freak out. Probably. You never know. Maybe we go up. You never know. But I think, yeah. What do you guys think happens if we do not cut rates next week? Again, I tend to think markets are going to freak out and go down. Next Wednesday is the next FOMC decision. We will be streaming it completely live, as we always do, breaking down everything. We also have an updated dot plot coming next week, right, where they update the outlook and projections for the economy. And so that'll be a big story coming next week. So be ready. We're going to stream it live. Subscribe. Hit the notification bell. Thanks so much. Yeah, CPI data tomorrow is massive. Subscribe. We'll be streaming that live like we did this morning. All right, let's take a look at gold. About 5 minutes left. Nvidia still up to almost 177s. Anything else I want to take profit in? I'm still in HIMS. Powell comes in with a red tie and raises rates 25 basis points. That would cause a drop, I'm sure. I'm usually pretty fair with Powell. I think that's a hard job. I think we've had a lot of inflation, so he's been hesitant to cut rates aggressively. But yeah, if he did that, I would criticize him. I don't think he's going to do that, though. That's pretty far-fetched, but... Alright, guys. 4 minutes. 4 minutes into the open. Let's see what we get. Yeah, Oracle is wild, man. Oracle up 30-something% right now just on earnings. It missed EPS and revenue expectations, didn't it? But its outlook for cloud and AI made it go up 30+%. Wild. Let's see what this does at the opening bell. I'm kind of curious about this one. Like, I'm not super opposed to shorting Oracle if it looks weak, but I think it's risky as well. I don't think Powell would ever wear a red tie. I think he intentionally does some type of neutral color. He doesn't want to wear green. He doesn't want to wear red. And so instead he wears purple. That's a tough job for $200,000 a year. You know, the amount of public criticism you get for being the Fed chairman for $200K a year. I'm not saying 200K is chopped liver. What I'm saying is that that's not a lot for Powell. I think. I don't know. The influence is what I'd probably be the chairman for free, just based off of the influence and, you know, You can probably do public speaking engagements for the rest of your life. Just if you're, you know, but still, tough job for 200K. Right, no, he makes more just off of influence. Yeah, 100%. He's already worth 50 mil or whatever it is, based off of he used to be a fund manager, investment banker. Why not both, Mr. Protein? Oh, I'd be fair, but you know, might take some opportune bond trades, you know. I'm just joking, I would never. All right, guys, we're up to over 24,000. The opening bell is in about 2 minutes here, 2 minutes. Let's see 24K. 24K is a big level. We got the high of the day up here at 4150s. Yeah, sprinkle little rate cuts. All right, guys, here we go. 30 seconds. 30 seconds. Google down a little bit at the head of the open. But we got about a minute left. Bull or bear for the open, guys? Let me know. 77% of votes out of about 2,000 are bullish. 23% are bearish. All right, guys. I'm gonna put my funded account up here. I think now. NASDAQ under 24,000. We got 30 seconds left. Gold on the right side, Bitcoin on the top. We got Oracle here. I'm curious to see what that does at the bell. We're gonna watch NVIDIA also, though. Bull, bear. I would listen to a Powell audiobook. I think it'd be relaxing. Covering all these meetings, I probably listen to Powell too much. All right, guys, here we go. Dare you to. All right, there's the opening bell. Let's see what happens. See, the problem, though, is that this inflation data might scare recession worries. Right, might spark recession fears. Is something we could see. Like with weak payroll numbers and low inflation, people might get worried we're late for rate cuts. So let's watch. CPI tomorrow is going to matter a lot, but I mean, today's not insignificant for sure. Marvel's actually spiking up, though, at the opening bell. Wow. Oracle's down. Gold's creeping up. Google's falling down here. NVIDIA is slightly lower since the opening bell. All right, we're at almost 36.90 here for gold and gold futures. Yeah, tomorrow data is expected. Remember, tomorrow data is expected at 0.3% month over month for core. Baseline headline CPI is expected month over month at 0.3% as well. Core is expected at 3.1% year over year. Headline year over year expected at 2.9%. Should have held my gold trade. That's all right. I'm already up 1,000 on the day. I can't get too upset. Oracle rip it up. Glad I didn't short it. I gotta wait 5 minutes to trade. We're 3.5 minutes into the day. So we'll see if we get anything good. Oracle pump it up, gold pump it up here as well now. Wow. Alright, so let's see if we fight back over 24,000. I still gotta wait maybe 30 seconds before I can trade. I'm looking for some moves to make. I would short this. It looks like a short, but you never really know. Sometimes this stuff can be by the rumor, sell the news. We also have CPI tomorrow, so there's a chance that we go sideways. Oracle still pushing up, dragging the market up. Gold spiking up as well. Bear trap. Stuck in traffic, living vicariously through John. Thanks, John. Learned a lot. Hey, you're welcome, man. Wall Street ruining our fun. I hope she feels better, Corey. Sorry to hear that, brother. All right, Nasdaq's fighting its way back up. I kind of want to short this though. You know what? I'm gonna short right here. See what we get. A little early, but hey, we're gonna take a small position. Might add 2 contracts if we move up. There we go. We're gonna cut it right there. Small little scalp to start the day. But what I was looking at is this resistance level right here. Look at this level. That's what I shorted into. That's why we got like an immediate reaction down as soon as I entered, is because we ran right into this resistance area. Watch 950s right here though. That might propel it back up, and I don't know what we're gonna do. It might, I don't know for sure. Chris, if you keep saying I give financial advice, I'm gonna ban you. You know. What's Target doing? I'm still in Target. I'm actually a little red on the position. But to be honest, I think I'm net green in my full Target position. I had a much larger position. I'm probably holding 20% of what I was. And I took profit when Target bounced to 94s. AI stocks. $50 basis points? No, I don't think it means 50 basis points. I don't know, chat. Let's do a poll now. Let me do another one here. I don't know. I think timing it is the move. I think if I base it right off of if you're talking about my trades, I think basing it off of big milestone levels on the chart that have been confirmed makes more sense. Short-term trades. QE? FTW? No, I don't think we should do QE. How much will we cut? Or here, what will the Fed? All right, so we got a poll going live in a second. What will the Fed do next week? Vote on the poll. Let me know what you guys think. I would say I'm the top 3 nicest ever, Chris. For sure. Definitely up there, you know, in terms of nicest guys ever. NASDAQ falling down at 940s now. This is mostly driven by, like, okay, hold on. This is mostly driven by Amazon. Right? And this is kind of what I'm saying. They debuted their AR glasses thing. This is mostly Amazon falling down a little bit here. That's dragging the NASDAQ down. The question is Amazon going to hold the market down? I don't know. I almost want to buy it now. I think I'll wait, but it doesn't look bad. Don't copy me, not an investment professional. Yeah, I would say I'm the most humble person right now in the world, potentially. Let's see if me buying it here is the right move. If I'm the top 3 most humble, give me the top 2 right now in chat. Let me know. What about gold? Will it keep growing? If fear and uncertainty is there, gold in theory should go up. And I think we got a lot of fear and uncertainty on both sides on doves and hawks. I think people fear inflation as well as economic and labor weakness here. Yeah, because Nvidia's up after the bell. So is a lot of other tech. Oracle is up. But Amazon's falling, is what this is. Meta down too. So Meta's down with Amazon. Interesting. I would assume it'd be the opposite. But Bitcoin broke highs again, up to 114.37s in Bitcoin futures. Gold pushing up as well, almost back up to 3,700, where it's around all-time highs. Is the S&P breaking all-time highs right now? 65.50. Yep. S&P broke all-time highs this morning at the open. Right at the opening bell, that first 1 minute. All-time highs for the S&P. John, what do you think of 100 basis point cut rather than the string it out into next year? I think that's never going to happen. I'm not saying they shouldn't. I think maybe that's a better argument than delaying cuts consecutively, you know, 6 weeks, 6 weeks, 6 weeks. I think you might have an argument, just rip the band-aid off and cut 100 basis points right now, 1 full percentage point. But I think that's a very, 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 very low probability based off of the inflation fears that we're seeing, even with a low PPI print. I think CPI tomorrow obviously matters, but I don't think we're ever going to do 100 basis points in a single meeting cut. I just don't think it's going to happen. Yeah, it'd scare the whole market, bro. The market would freak out. All right, we're back up. Let's watch 950s here. All right, guys, we got CPI news tomorrow. Again, we do have some stuff coming out at 10 a.m. in about 15 minutes. We got we have what is it? Wholesale inventory is pretty small, but 0.2% expected. Last time was 0.1. Look, there's 950. Yeah, I'm pretty sure we're going to do 25, guys. I don't think there's any chance we do 100, of course. Tiny chance we do 50. But I think it's also the day before CPI, and so... Yeah, NVIDIA's pushing up, but NVIDIA's been weak for a month now. So NVIDIA up to 178 is good. Yeah, I mean, I don't think there's any chance we don't cut rates now. I might buy 23.9 here if we get down here. I kind of like us to get down to 23.9 though first. Again, this is Amazon and Meta breaking down here. I don't know if I'm going to get 23.9. Reuters markets now fully expect 25 basis point cut. Yeah. NVIDIA all-time highs are 185 roughly, 184.50. It's at 178s now, so it's still got a ways. All right, chat. "13 minutes and we got some small data coming out, but it's not big." We do absolutely zero for this weakening economy. ETH just went up. Yeah, crypto's up big on this report. It means more easing potentially. Lower inflation data gives more green light to ease. I don't think we're going to do QE. I hope we don't. I think maybe I would honestly be okay with 50 after today's inflation data. It depends on what tomorrow does, though, to be honest. Apple shares down 1%. Company holds down new iPhone prices. Again, the president came out criticizing the Fed. We're very flat, guys. We're not really doing much. Google's down. We got Nvidia pulling back a little bit. Amazon's down big. Meta as well is down, but starting to rebound over the last few minutes. No one want to buy 10-year treasury bonds anymore after rate cuts and low yields. Yeah, I understand. That's the nature of things, you know. Yields are going to go down, which means bond prices are going to go up, which means they're going to be less. There's going to be less interest, of course, you know. Yeah, again, I told you guys a lot. We're probably cutting 25 basis points. Regardless of what CPI shows up next week or tomorrow. I mean, we're probably cutting 25. We're too close to the meeting. We're a week away from the meeting. I doubt they're going to change the odds super heavy leading into this, but you never know. All right, so we're testing 950 here. We're still rejecting at 950. I would buy 900s. Yeah, so remember, guys, yields and bond prices inverse each other. And so with yields going down on rate cut odds, and rate cuts and interest rates and yields follow each other. Bond prices and yields inverse each other. So if yields go down, bond prices go up. Like existing bonds with higher coupons rise in price. Some investors are attracted to that, looking for gains, not just yields, but, you know. Usually if people think the Fed's going to keep cutting, they buy bonds early, expecting yields to keep dropping and the prices of the bonds to rise, but they actually demand will actually can actually increase. I mean, not decrease, but it depends on what the market does as well. What the market does is going to make people flock. There's 900. I missed it. 23 nines. Ah. I wanted it. I started talking about bonds. You don't love to see it. 23 nines right there. Missed 23 nines. I talked about it. I wanted it. We didn't get it. Should I cry right now? Chat. Yes or no? Let me know. I still would have bought it if I would have seen it, but too busy yapping. I know, bro. Top 3 yappiest today, man. I don't know what to do. If I stay quiet, people are like, "Why are you quiet, bro?" If I talk, they're like, "Bro, stop yapping." You know. I can't win. The internet. This is my life. We're at 920s right now. 920s. I wanted 23 nines. Remember, I talked about it, but just didn't catch it in time. Thank you, Ulrich. I'm just gonna have to watch it continue going up. Can you sing Boys to Men? No. We got wholesale inventories coming out at 10. We'll see what happens. Expected at 0.2% month over month for July. We'll see what it looks like. It's pretty lagged, but we'll see. We're watching it. I should have bought 23 nines, man. Freaking bonds. I blame bond prices because that's what I was talking about when it dropped. It's all right. Next time. You can yap all you want. It's your channel and we're watching. Yeah, that's true. All right, guys, we got 5 minutes left until wholesale inventories. I don't think it's going to move markets, especially when it's kind of paired with today's PPI report. I think it's just less. I think it's going to move things less, but it's all right. Ban whoever asked the question. I should, you know. How dare they distract me, you know. I signed in for the yap. Yeah, like I said, top 3 yappiest ever, I guess, today. 3.5 or 4.5 minutes left. We might go back to 23.9. I don't like a retest of it, to be honest. I like the first test, not the second one. The second one, there's too likely that we chip away under. We might bounce, but it's just lower probability here. So I'm just going to sit tight and wait. We got CPI tomorrow. Market might be flat and choppy. Super micro semiconductors. It's been a minute since I've looked at them, honestly. They're up to 45. They're so volatile, though, man. Like the percentages that this thing moves up and down. This thing goes from 60 down to 20, back up to 60. I don't like it at all. That's too much risk. Even if it's at 45 right now, the likelihood that it holds up here, I'm not saying it's not over 50%, but even if it's 60%, there's still a 40% chance of a drop. I just don't like it. But it's up. It's up today. It's at $45, 44.70s. Yeah, I'm sure altcoins are running too based off of the easing potential with low inflation data today. That makes sense. 3.5 minutes left. All right, we're at 9:30s. Yeah. I don't think the market's waiting for wholesale inventories. I think the market's waiting for CPI data tomorrow. And so I think that's what we're going to see. Maybe chop, big range, but chop potentially today. You never know. Maybe we run in a big direction, but that's what I'm expecting. Hey, later. Later, Ray. See you, man. I think CPI now is irrelevant. PPI just came out. This is my thoughts. You don't think after last month's hot PPI report, even though they did revise it down slightly on this report, you don't think after PPI's heated report last month, there's not a potential to see it passed on to consumer prices tomorrow? And because of that, it's relevant. I'm not going to say it's more relevant than PPI was today, just based off of PPI being super hot last time. I think we'll see tomorrow. I don't know. CPI is generally more important than PPI because CPI looks directly at consumer prices versus, which affect everybody, versus wholesale business prices, which is what PPI looks at. So generally CPI is more relevant and influential, but you never know. It varies month to month depending on the context of markets. Yeah, PPI is at the bottom of the screen. It showed up at a negative number month over month. All right, guys. 1 minute until again, I don't think these are going to move markets. I'm going to stick around and cover this data anyway because that's what we do, but I'm not the most excited. I think it might be a small little move here. We'll see. "30 seconds. Yeah, that might be true. Plasma. I'm not saying you're wrong there. All right, guys, 5 seconds. We'll see what we get. It's small. Expected at 0.2% for wholesale inventories month over month. And it showed up at 0.1%, lower than expected wholesale inventories, which is better, I guess. But again, it didn't really move markets. 0.1%. Kind of nothing, but that's okay. Listen, guys, if you want to check out Top Step, beautiful way to help support the channel. There's no PDT in futures. You can day trade the S&P, NASDAQ, Dow, Russell, gold, commodities, some currencies. Very similar to day trading stocks. We made a decent amount on gold today. No PDT roll. Get you around the PDT roll. The base one's $50. They're a sponsor of mine. I'm biased. I get paid by them. But useful to learn day trading. It makes no sense to fund your own account thousands of dollars to probably lose it as a new day trader. Instead, try a funded account program. Top Step's the most legit. $50 a month for the base one. They pay out millions, fund thousands, and they now have their back to funded option. So once you're funded, you can reset your funded account if you lose it. Just a lot of really cool stuff for Top Step. Great way to help support the channel as well. And I'll put the link up. I appreciate the love. Thanks so much. And yeah, guys, listen. I'm going to tell you guys this. As soon as I end the stream today, as soon as I close it, it's going to bring you to tomorrow's stream. I'm going to see who my real supporters are. If you don't stick around at the watch page for my next stream, 24 hours, no bathroom breaks, you're not a real fan. Okay? Again, stick around. No bathroom breaks. I'm watching. 24 hours. Do it now. I'm just joking for liability reasons, but do it anyway. Remember, I'm watching. Okay, I'm watching. See you guys later. Remember, top 3 worst trader. Don't copy me. I have no idea what I'm talking about. Might be wildly wrong about anything I say. Don't copy me. I'm not an investment professional. Many here would argue top 3 worst trader ever. That might be true. I'll see you guys tomorrow, 8:30. Be ready.